Hello, everyone. I hope you can hear me. Welcome to the second episode of The Green Room, supported by APIX. I'm your host, Amrita Veer. We had so much fun last time talking about open banking in Southeast Asia that we decided to do it again, this time talking about wealth management with Michaela of StashAway. So today, of course, we'll talk with Michaela. We'll talk about his journey. We'll talk about StashAway, and we'll talk about COVID, the COVID impact on the market. Before we do that, we're going to hear a little bit about the APIX community, but then the rest of the time is for Michaela, and I promise we'll spend the last 15 minutes on your questions. I know I ran through them last time, so we've got 15 minutes. Please share your questions in the Q&A box below. I will try to get to them as we go through, but we definitely have some dedicated time at the end. So jumping right in with the APIX announcement. Last time you heard from Todd Schweitzer about his path to open banking and starting his own fintech Broncos in the Philippines. Today he's joining us as the APIX community manager to talk about the platform that supports us and some of the resources. Todd, over to you.
Thanks, Amrita. Let me share my screen. All right. 1 second. All right. So yeah. So thank you very much for the introduction, Amrita and Michaela. Great to be with you. So my name is Todd Schweitzer. I'm the CEO and co-founder of Broncos. Broncos is a fintech and open banking technology company operating across Southeast Asia. And Broncos is also part of the Strategic Advisory Council for AFIN. Now, I think it's worth clarifying that you hear AFIN, APIX, so let me just clarify that one. So AFIN is the organization, APIX is the platform, right? So AFIN is the ASEAN Financial Innovation Network, which is basically a consortium of a lot of the regulators, industry associations, and some of the big technology companies supporting the banking ecosystem in Southeast Asia. So that's World Bank IFC, that's MasterCard, that's AMTD Foundation, that is the Monetary Authority of Singapore, and a couple others. And so AFIN, the consortium, is the one overseeing APIX, which is a platform for enabling collaboration between fintechs and financial institutions. Amrita, can you see the screen? Am I presenting?
Yeah, I can. It's not presenting, but I can see it.
1 second.
There you go.
Yeah. Anyway, I'll just do this for now.
I can see the page with all the logos.
Okay, cool. Okay, so just a minute or two on APIX. So why was APIX set up? APIX was set up because Broncos, like many other fintechs, it's a huge, massive pain to work with banking institutions because there is limited market access to build credibility and basically get in the door at some of these financial institutions. And then, you know, when a fintech or startup is typically working with a financial institution, it usually starts with a proof of concept or some sort of pilot project that may take 6 to 14 months to even close. And then, you know, and then there's a 3 or 4 month prototype. And then after that, that's when you go to, you know, the procurement or production phase, which may or may not even happen. And I wonder actually if Michaela's encountered this with some of his FI partners. Maybe he could chat about those partnerships and how painful it is. So really APIX is meant to address that sort of inefficiency, which is that large legacy, super regulated financial institutions that are built frankly for dealing with large vendors, it's really hard for them to interact with startups in a commercial way. And so that's what APIX aims to do. So on the one side, you have fintech financial institutions. On the other side, you have a fintech ecosystem, which is basically startups. And APIX is a hosted cloud-based platform that enables them to try stuff out. And that includes a marketplace where FIs and fintechs can do some matchmaking. It includes sample data. It includes a testing sandbox. You can actually write code and test out APIs and run prototypes inside the hosted environment. And there's a community where you can ask questions and do kind of a little bit of research with other users on the platform. So I think it's really useful for that way. There's a number of kind of flagship partners. Union Bank in the Philippines is one. They were a partner, they were a speaker on the last Green Room episode. Citibank, Prudential, Maybank, Trusting Social, Mambu, which is a new core bank, a modern core banking provider. So there's a number of kind of larger players in the sort of tech stack of a bank that participate on Apex already. So highly recommended you take a look if you haven't already. Who are the members of AFIN and participating on Apex? Sorry. There's a number of consortium partners represented on the left, and then there's a strategic advisory council, which really represents the community, right? Represents the fintech partners, represents the technology companies, and together we're trying to reduce the barriers to kind of partnerships between legacy institutions and startups. And so Brancas is a member of the advisory council. A couple things that I wanted to raise. One is there are two different programs available for startups during that were launched basically as supporting resources during the COVID situation. So one is what's called Apex Cares, which is part of the Singapore Cares package. So basically there's free access for 6 months to the Apex platform. Any fintech participating can add insurance complimentary for their employees. And there are up to $25,000 of cloud credits from AWS. And I think possibly more interestingly, there's actually a $50 million, Singapore $50 million pool of investment and grant capital for startups that are doing pilots, proof of concept, or otherwise working through the Apex platform, right? So there is a grant scheme for Singapore-based fintechs that are doing some kind of proof of concept, and there's already a lot of really interesting prototypes we're seeing coming through. So the grantee needs to be Singapore-based, but the partnership could be anywhere in ASEAN. So it doesn't all need to take place in Singapore, although the fintech applying for the grant needs to be based in Singapore. And then there's also the Solidarity Investment Scheme, which is basically AMTD, which is an investment fund, has set aside several $1 million for venture investments in Apex hosted fintechs that are doing pilots or proofs of concept on the platform. So would recommend you check that out if you haven't already. And again, thanks a lot to the AFIN and Apex community for co-hosting the Green Room and the event. This event as well as many other webinars. I think it's a really cool initiative and way to kind of keep the conference vibe going, even though most of us are still working from home. So thanks for the time, Amrita and Michaela, and I turn it over to you.
Thank you, Todd. And again, yeah, thank you to Apex for supporting us. So now it is my great pleasure to introduce Michaela Ferrario, the founder and CEO of StashAway. So Michaela, let's talk about you. You began your career in consulting with McKinsey, also in private equity in both Europe and the US, where you focused a lot on financial services there. And then you jumped to join Rocket Internet, and that's actually where I want to start. For those who may not know, Rocket Internet is a venture builder company, which basically takes successful business models and replicates them in other markets. They're responsible for bringing us Lazada, Foodpanda, Zalora, among many others. So Michaela, let's start there. How did you land at Rocket and then make your way to Singapore?
So how did I land at Rocket so first of all, thank you. So hi and thank you for everybody that is tuning in tonight. How did I land at Rocket? I was in private equity, as I mentioned. I had left McKinsey. I was in private equity, and I was kind of getting bored until one day I got a call from a former colleague of McKinsey telling me that she was actually my boss in a project at McKinsey, and she told me, "Look, I left McKinsey. and she's German. I moved to Russia, and I'm building a company in Russia, and we're looking for somebody that builds the same company in Italy. And do you know anybody? I'm like, oh, that sounds actually kind of interesting. And so, long story short, after not too much time, I decided to kind of leave private equity and join Rocket. And the main reason behind it is that I always felt I was a little bit behind the wave. So I was at McKinsey in the early 2000s. I thought that McKinsey was cool 10, 15 years earlier, when, especially in the large offices. So I was in Milano and New York, which are both very large offices. And so it was actually, I thought it was much cooler, much more interesting 10, 15 years before I joined, when the offices were smaller and they were only doing super strategic work. Then when I went to private equity, it was like in 2009, 10, 11. I also thought I was maybe 10 years too late. And so I thought kind of joining, or actually I founded Rocket Italy. So founding Rocket in Italy in late 2011, early 2012, I thought it was the first time for me to actually be ahead of the wave. And the wave that I identified was called the internet. And I thought it was going to change, it was already changed a lot of things everywhere, but Amazon opened an office in Italy in 2014, I believe. So it was kind of very early days. And that's how I started. I thought it made sense. And to answer your second question on how did I land in Singapore? So at Rocket, as I mentioned, I founded the Italian office, and my job was to launch new companies. And I've launched 2 companies in Italy. I was then asked to do Pakistan. Don't ask me why, it just happened. And so I founded 3 companies in Pakistan. And then Rocket asked me to move to Singapore and take the leadership of one of the investments they already had in this region, a company called Zalora. So I was the group CEO of Zalora for around 4 years. That's how I landed in Singapore.
That's amazing. Can you tell us a little bit more about your time at Zalora and some of the things that you learned there? And then how that actually translated then to leaving Zalora and starting StashAway?
Yeah, so Zalora was an amazing experience where, I think I learned a lot, both from things that in general Rocket does very well, as well as from things that Rocket does incredibly poorly. When I joined Zalora was around 9-10 months old and had 1,500 employees in 7 countries. I was 31 years old and I was the CEO. So I was kind of miles away from my comfort zone, and the situation was incredibly messy. You can't imagine 1,500 people hired in 10 months in 7 different countries. You can imagine that there's no culture. Everybody's going in a different direction. There is a lot of things to fix. And so it was a very interesting experience, because I had this dual responsibility of trying to scale the company, which was at the time still quite small, while at the same time trying to make sense of the structure. And I think we did a decent job at that. I don't think we kind of did a perfect job, but I think we went into the right direction. And by going through that direction, I learned a lot of things. How did this then translate into me leaving Zalora Rocket and building and starting StashAway together with my 2 co-founders? Is that I thought it was a gigantic opportunity in solving the wealth management issue in Southeast Asia. And I thought about it because I was a client of the banking system, and I thought it was embarrassingly bad, my experience as a customer. I had 2 bank, I'm not going to name the banks, but I had 2 bank accounts with 2 different banks, a local one.
Not that many in Singapore.
Yeah, a local one and an international one, so not all locals. And I was, I just realized that it was just a sales channel to sell me expensive products. And I thought that, the industry could do better. And when I realized that there were robo-advisors in the US, Betterment, Wealthfront, etc., I looked for a local robo-advisor to invest my own money. I actually literally Googled robo-advisor Singapore, and I couldn't find any. And that's when I started thinking, maybe rather than selling T-shirts, I should help people build their wealth. And a few months later, I met Nino and Freddie, and kind of things came together. And there is a lot of learnings, honestly, that translate from Zalora to StashAway, because obviously the topic is very different. One thing is to sell fashion online, which is a very transactional type of platform, and the other thing is to kind of build long-term relationship with clients as you help them build their retirement plans. So very, very different. But at the same time, there is a lot of things that are similar into how you build an organization, how you select and motivate people, how how you acquire customers and how you communicate with customers and how you're there for customers through kind of client support. And so I think actually there's a lot of learnings that are applicable. And then, the way I like to think about it is that my first half of my career was in financial services. Second half was building consumer internet companies, and StashAway is the merge of the two.
Yeah, that's so true. You've got these definitely two, you've had a, kind of a financial services experience in the West and then an e-commerce experience in Southeast Asia. And you did use StashAway to sort of bring them together. So that's really great. Tell us a little bit more about StashAway. I think maybe people in Singapore are familiar with StashAway, but tell us a little bit about the organization and maybe how it's a little bit different from some of the other robo-advisors that exist in the West.
Yeah, absolutely. So StashAway is now a 4-year-old company. We started in Singapore in the summer of 2016. We are now live in Singapore and Malaysia. In both countries, we are fund managers from a regulatory perspective. So we have a CMS license for retail fund management in Singapore. And we were the first digital players we are awarded such a license. And we are a digital investment manager in Malaysia. And we were the first player to actually get the license in Malaysia. And we're currently in the process of actually getting the license and launching in 3 new countries. I'm not gonna name the countries, even if it's not completely secret, but I'll pretend it's secret for a second. So we are kind of trying to expand. We are a fairly the size of the organization is not gigantic. We are 80 people right now, and we want to keep it that way. So we've always, since the very beginning, tried to have a focus on quality over quantity. So we're trying to hire a few people of very high quality standards and enable them to take more responsibilities and drive things. So I'm trying to avoid getting to the Zalora situation of 1,400 people in 7 countries going in any direction. So we're trying to kind of do the opposite and go. And I interview interns just to give you a sense. So it's to this day. So this is has been a gigantic focus of us as a founding team and myself particularly on hiring the right people, setting the right culture, etc. What we do is we help people. The way we describe it internally is that we want to empower people to build wealth for the long term. So StashAway is a wealth management platform that helps people build. The core product is diversified portfolios that give exposure to global asset classes at different level of risk. We also have a cash management product, which we call StashAway Simple, which in Singapore gives 1.9% on cash, and in Malaysia, in ringgit, gives 2.4% on Malaysian ringgit, which I think are by far the 2 best cash management products in the 2 respective markets. How are we different, you mentioned, from some of the global players? I think the value proposition is probably similar, which is kind of helping people do the right thing with their money, with their savings. So invest in a diversified way, very low cost, with a long-term view, trying to ideally attach a goal to each pool of money. But I think what is very different is the market situation. Of course, if you are a US player, you are a kind of a robot Betterment or Wealthfront in the US, which are the 2 largest, managing around 25 billion each. Your job is really to convince people to move money out of Charles Schwab or Vanguard into their portfolios, because 51% of financial wealth in the US is actually invested in securities already. And this does not include 401ks, which is on top. While in this region of the world, money actually sits on bank accounts doing nothing. So our job is really to explain to people why it's important to get your money to work for you and to do it as early as you can when you have time to build your retirement plan. Only 19% compared to the 51 I mentioned earlier, so 19 of money in Singapore is actually invested for households in securities. And that's obviously a tiny figure. And if you go to Malaysia, Thailand, Vietnam, Indonesia, actually those numbers are even smaller. And cash is 36% in Singapore, 42% in Malaysia, 44% in Thailand, 64% in Indonesia. So 64% of people whose financial wealth in Indonesia is in cash. So you can understand, cash meaning bank accounts. You can understand that there is a kind of a very different angle, and maybe therefore the most important difference between what we do and how we do things versus people in the West is with a much stronger focus on education. So we have something we call StashAway Academy, which we use to kind of educate people on a number of financial planning and investing topics.
That's amazing, Michaela. You're really, I think, bringing a really needed service to Southeast Asia and democratizing wealth management in a way that I don't know if anyone's ever seen before, and at a scale in Southeast Asia that is just huge. So incredible what you guys are doing.
And the reality is that when you use the word democratizing, which I agree with, I think it's a fair description, but some people by looking at that think that so that the product actually works or is designed for people that have $50 a month to invest, but that's actually not true. So we have clients with millions of dollars with us, and and actually as I mentioned earlier, I started the company because I thought about me as a customer that was underserved by the banking system, and and as a CEO of Zalora, obviously I had decent savings, and so we actually designed a product to cater for affluent individuals, and then in the process we decided to actually have a $0 minimum balance, and so de facto we actually acquire a lot of customers that are retail from a banking logic, but in reality most of our assets actually come from affluent individuals.
Yeah, that's amazing. Serving every part of the customer base. Michaela, I want to switch gears a little bit and talk about actually COVID's impact on savings and investment in Southeast Asia. I'm sure you can tell from my accent that I'm American, and I've been reading tons in the news about savings rates in the US being at record highs during COVID, which is a little counterintuitive. So you've been in Southeast Asia for a while. You are obviously observing your customer behavior at StashAway. So I just wanted to ask you, what trends are you seeing here in Southeast Asia when it comes to savings and investment?
Yeah, so I don't have official data, so I don't know whether overall savings are increasing or not during the COVID situation, but I can explain the US data and maybe translate it also here. I mean, the US data is, unemployment went higher, fair enough, but it went from 3% to 10%. The remaining 90% of people have been locked at home and couldn't spend money, and therefore they saved more. And that's, I guess, why savings went higher during the last 6 months. I don't know, again, the aggregate data for Southeast Asia. Obviously, there is just less data availability. What we have seen is we have done very well throughout the period. We are significantly above budget for the year. And it's difficult to tell you how much of it is due to people saving more because of COVID, how much of it is due because we did very well through the market crash and therefore people trust the platform more, or how much is it due because people are bored at home and therefore they have time to actually look at their bank account and say, oh, I have too much cash, let me do something with it. So I don't know what are the components of this, but it did feel that there was significantly more engagement with our clients. So for instance, in our StashAway Academy webinars, we have an incredible participation, like literally 10x what we used to have. So it looks like people are kind of looking at the topic of what to do with my money. And yes, people are investing a bit more than we saw in the past. So probably there is also a saving effect. If you can't go to the restaurants, you're saving $100. And if you do it for a few weeks, that's that's $500. And if you do it for millions of people, that's actually a lot of money.
Got it. Thank you. So are you seeing differences in your data and like the types of things people are saving, or are there differences among customer segments? I know you're serving a wide range of customers. So are there differences between like the types of products customers are investing in, or between the customer segments themselves?
Yeah, so maybe one difference that we see in terms of also behavior during this period is that we do see both in Singapore and Malaysia, but actually more in Malaysia than in Singapore, we do see some people withdraw money and put in as a justification, I need money because I lost my job. So that's something we see, and usually those are smaller amounts. So we see people kind of withdrawing smaller balances, and obviously that's kind of the part of the population that has been the most affected by the current lockdown and the situation and the effects on the economies. While obviously the more affluent customers, you don't see real changes in behavior. Now, one thing we've seen that may be interesting is that during the course of March, we've seen, so when the markets really dropped, we've seen actually affluent customers withdrawing from our cash management product because they had margin calls in the bank. So what you see is that people were trying to sell whatever they could find liquid, and our cash management product is liquid, and so we actually saw people just selling stuff because they had to cover margin calls for leverage products at the banks. That lasted for a couple of weeks. The 2 central week of March, we saw that behavior. We talked to a few clients and we understood that was the reason. It was an interesting experience. And obviously that talks to a little bit of the higher part of the market.
Yeah, absolutely. And I guess similarly, has StashAway adapted any of its product offering or changed its strategy in response to COVID?
We did a change in asset allocation in the middle of May. So throughout the market crashed in late February and until the 23rd of March. So 23rd of March was the bottom, and I'm talking about S&P 500 as a kind of proxy for the market. And we didn't react through the market crash because it was very fast, and in practice, the market priced immediately a very deep recession. So we ran a very systematic way of managing money. So we don't make any human calls, and maybe a human would have probably sold at a certain point during the crazy crash, but the numbers were saying that the market were pricing something more than what was happening, especially with the Fed intervention. And so after the Fed intervention, we didn't change anything until mid-May. And in mid-May, what we did is that we've actually reduced US exposure we did what we call a re-optimization. So we have reduced US exposure in all of our portfolios, reduced slightly risk, or better said, we kept risk at every risk level constant, but made capital market assumptions that implicitly assume for rockier times ahead of us. And that so far has been a good call, because obviously the reducing US exposure, increasing Asia exposure in the last month and a half obviously produced incredibly good results, especially because the US dollar depreciated by around 4 or 5% since we did it. And so that actually helped us sustain very good returns in the last 60 days. But honestly, you can't judge a fund manager on 60 days. You need to wait for another 5 years.
Right. I was actually my next question for you was actually going to be, do you think the behavior that you're seeing during COVID among your customers, and even your strategy, if it's the start of a longer term trend, or it's just a blip on the radar? Is COVID going to go away and we're going to go back to doing things the way they were? Are customers going to go change the behavior back? Or do you think this is prolonged, we're going to see customer behavior stay the same for a while?
Well, look, in our case, I don't think we have seen significant changes in behavior, to be honest. Maybe the only one, as I mentioned, is the willingness to consume content through webinars and what we're seeing tonight, right? So and that's exactly what we're doing tonight. So this is, I guess, the biggest change we have seen. So but from another perspective, most of our clients have continued to dollar cost averaging into their products throughout the ups and downs and throughout the crisis, the same way that they did in 2019. So from our perspective, we haven't seen any big change. We've seen, as I mentioned, kind of an acceleration, but that's an acceleration that we've seen also last year. So I'm not sure I want to tie it up to COVID. The extra savings we mentioned earlier due to kind of a less activity offline, hopefully they will go away, meaning that it means that people actually will go out, start spending, which is probably good for everybody anyway. So I don't think that will last for long. I think maybe on a different topic, one thing that we're looking at as a company is how to change our policies with regard to working from home and remote working. So we're actually finalizing a new policy that is significantly more open and relaxed about where you work than we used to be, because we simply realized that the last few months we were able to be completely productive, and while obviously there needs to be some rules in place to make sure that we don't lose the ability to brainstorm, and also that we don't lose the ability to catch up with each other. But at the same time, there might be reasons for people to decide to work from home, or to do some parts of the week from home, or maybe a week every month from home, or maybe 3 months a year in Bali for whatever reason, or in Germany, and we want to be able to allow for that.
Yeah, that's great. And as someone who's also working on a remote team 100% of the time, I think what you're doing is great. I would love one of those policies as well. Before we move on to the next question, we do have a question from an audience member. Could you repeat the website application that educate people to put their savings money in order to invest? I think that's part of StashAway's offering.
Yeah, so it's called StashAway Academy, and what you need to do is either Google StashAway Academy or simply go or download the app, the StashAway app, and there is an Academy tab where there is also all the all of the next webinars and including also video on demand. You can, or the other things you can do is actually go on the StashAway website, and there is a button, one of the button on the top right is called Learn. And underneath that, there is actually a bunch of links. There is a link to our podcast, which is called In Your Best Interest, which is about, again, how to invest, talking with a few experts. There is a link to written content, and there is a link to the calendar of Statuary Academy webinar events. If you want to watch video on demand, you need to download the app. They're only available on the app.
Great, thank you, Michaela. I've listened to the podcast, and it's very good. I've learned a lot from it already.
Thank you.
So kind of getting back to COVID, I'm curious, in your opinion, especially someone that's caught a bunch of these waves of innovation. What are some companies that have exemplified success during the lockdowns during COVID, and which companies do you think are positioned to succeed hereafter?
Good question. I mean, there are some obvious answers on companies that enable life in lockdown. So from Zoom, as we are currently showcasing, to e-commerce, obviously. So, companies that are in industries that help survive or thrive during this period. So I would say they've been simply lucky, right? They were just doing the right thing at the right time. I think companies that I'm thinking if there is companies that have pivoted quickly in order to help you. I think Google actually has done an amazing job on, for instance, Google Meet becoming a Zoom improving the Google Meet product very quickly, and therefore becoming a Zoom competitor. I think actually they've done very well. In terms of small, more financial services or fintech companies in Southeast Asia, I would struggle to tell you, to actually differentiate. I think in general, the financial services have been, I guess, less affected by what's happening. I think the banks are actually doing okay. Let's see what happens to their loan portfolio in the next year or two. But so far, I don't think they've been particularly affected by by the lockdowns, etc. So to be honest, I wouldn't be able to point out companies that have reacted particularly well to the situation, other than the ones that were just in their perfect situation, the food delivery companies, the e-commerce company, the remote meeting companies, etc.
Right place, right time. Got it.
Yeah, I mean that's I would say it's more luck than strategy, I would guess.
Yeah, yeah. And you think those same companies are positioned to succeed afterwards?
I think some of this will remain, as I mentioned. So I think Zoom and that depends on how you define succeed. So I don't want to say that Zoom is a stock you need to buy. I don't believe in stock picking anyway. But I don't know how much of it is priced in. But definitely, I think after we go back to normal, I think the number of people using Zoom regularly will be much higher than the number of people that used to use Zoom in January this year. It's going to be lower than it is now, but higher than what it was in January. So I think this will definitely remain, and same for Google Meet, etc. Same for maybe food delivery. I think some people have, discovered food delivery, and maybe the Redmart in Singapore, the online supermarket. I think people that used to go to the supermarket and then now have tried Redmart, maybe they're going to stick with that. So I think some of them will get a bump that remains there. But it is to be seen how much of that bump will remain.
Mm-hmm. One specific subset of fintech companies that I'm interested in and would love your take on are actually some of these gold savings companies that we've seen pop up all over Southeast Asia during maybe shortly before COVID. What's your take on those companies? Do you think it's just a reaction to COVID and insecurity in the market, or do you think these companies are positioned for success going forward as well?
So my personal so I understand why gold saving companies are kind of initially successful in this region. I know there is a history and a kind of a cultural history of using gold as a kind of a way of saving money. I don't think the whole maybe COVID uncertainty will change that too much. Maybe there has been some kind of a increase in growth recently, but I don't think it's something that will sustain forever. And broadly speaking, I think there are better ways, to be honest, to get exposure to gold, easier way to get exposure to gold investing that don't require investing through this company. So I'm not super convinced that this will be a long-term trend, but this is personal point of view. I may be wrong. And and when I say there are better ways to invest in gold, I mean I think the easiest way to invest in gold is actually buying gold ETFs, which are very low cost, very easy to buy and sell, and very easy to put in a portfolio.
Got it. Thank you. I wanna now look at StashAway again and like looking forward and talk about some of your future plans. And then audience members, we are gonna get into some Q&A, so please start sending in your questions. But my last question for you, Michaela, is, now that we're coming out of lockdown across Southeast Asia, you talked a little bit about some of the other companies that you think are positioned for success. I'm wondering, you had also already mentioned that you're going to be expanding to 3 more countries in Southeast Asia. What else is in the pipeline? What other exciting things are you working on that we should keep an eye out for?
I think the one, so on top of the 3 countries, the one other big things that we've been working on for quite some time, and it's actually been recently launched, is StashAway Workplace. If somebody wants to check it out, it's workplace.stashaway.sg, which is our solution to corporates. In practice, we empower employers to help their employees with their kind of financial health. And in particular, there are, I would say, 2 angles to it. There is a financial education angle, which in practice is kind of the corporate side of StashAway Academy, very similar logic on kind of doing unbiased education on the basics of financial planning and investing for employees of a given company. We do that for free as part of the second leg. And the second leg is enabling companies to build pension plans for employees as well as incentive plans. And for instance, in Singapore, that may solve the problem of supplementing CPF for expats, which is a problem that a lot of MNCs or in general companies that employ foreigners have, because sometimes they give cash in lieu, sometimes they don't give anything, and it's unfair. And so we're kind of solving that problem. And in other countries, is actually because there is no CPF or EPF, which are kind of the 2 large government managed pension plans in respectively Singapore and Malaysia. In other countries, the pension system is actually left a bit more to the individual and to the corporates, and therefore StashAway Workplace will actually kind of help those companies, for instance, in Thailand, where there is a provident funds requirements for corporates.
Got it. Thank you. That's really exciting, Michaela. And is that already in the market, or when can we? Yeah.
It is already in the market, and we have a team that is talking to kind of quite a few clients. And if anybody's interested, you can either reach out to me or go on workplace.stashaway.sg, where there is a form where you can leave your name.
Great. I actually had another question for you, which was around choosing to go with a B2C model instead of a B2B model. But I think with StashAway Workplace, I think you're covering all of the bases, which I think is great.
Yeah, so what we've decided to do early on is not become a tech provider to the banks. So usually when people talk about B2B for a company like ours, they mean building technology to be sold to the banks. And as Todd mentioned earlier, that obviously has, it's a business model and has its pros and cons versus going B2C. We decided to go B2C because we thought that the gap in the market was very large, and we thought that the gap in the market was partially produced because the banks were just making too much money in kind of selling unit trust with 2.5% entry fees and insurance product with 3% fees. And so we thought that if we actually were to go through the banks, that delta value proposition will be somewhat diluted. And that's why we decided to actually go straight to market. And Todd mentioned earlier, kind of talk about the difficulty maybe of actually kind of making live projects with financial institutions. We have actually had a few discussions in the past 2-3 years with a few financial institutions that approached us and asked us whether we wanted to partner. While it's not our core business, we're always open to have this kind of conversations. But the reality is that as soon as conversation goes down to financials and people realize that our fees are 1/3 of what the banks usually charge, then the pie is just too small for the banks to share. So the discussion just drops there.
Yeah, it's kind of a conflict of interest for them. That makes sense. So I think, Michaela, with that, thank you for entertaining all of my questions. We do have a few from the audience. So the first one is, would love to hear your thoughts on the Robinhood trading behavior in the US, and do you see such a platform coming to Southeast Asia?
So, I mean, Robinhood, for those people that may not know, Robinhood is a brokerage, and it's actually a kind of free brokerage. That's why it's called Robinhood. Obviously, they do make money in other ways. So you always need to remember that whenever you don't pay for a product, you are the product. And I guess that's exactly the case for free brokerages. I don't know the details of what happened. I read some of the stories, and obviously the most infamous one is the 19 years old that actually committed suicide because he thought he lost $700,000 US, which actually he didn't lose. And I think that, obviously when you touch people's money, you have a very big responsibility. And so your communication needs to be very careful, and the way you display data needs to be very careful. And internally, StashAway, when kind of this infamous kind of a tragedy happened, we actually shared that internally and tried to build a little bit of a case study to explain to people once again how important it is that whenever we release a new feature, a new product, a new communication, we need to really think about the way we display things, because in this case, really the tragedy was caused by apparently something that was communicated not in a very kind of effective way. The guy thought he lost $700,000 and actually didn't. To the second part of the question of whether there's going to be platforms like this in Southeast Asia, I think there is 8 securities operating out of Hong Kong that has been built on the modeling Robinhood, that has been recently acquired by SoFi. So I'm assuming they're going to try to expand in the rest of Asia. So I think, I don't know if Robinhood is also expanding to Asia, but yes, I do expect some of these kind of free brokers to come to these shores as well.
Great, thank you. One more question, Michaela. How in Singapore, I think especially, actually in Malaysia as well, how will the new digital banks affect your business? Do you see them as partners, competition? How does that affect your business?
Yeah, they can be both a partner or competition. And we have been approached by a few of the candidates. And while, again, it's not our core business model to kind of look for B2B partnership, this will be a B2B partnership, it is something we're open to. And we have been approached, and we will continue to entertain conversations with some of them. I think others will probably over time become somewhat of a competitor. To be honest, though, I think we made a conscious decision of being specialized in helping people build and manage their wealth, rather than having a transactional business or a lending business, which tends to be maybe more profitable or more sizable, let's say, actually, in terms of revenues. But we decided to be specialist in one specific niche, which is the one of wealth management. And we think that it's going to be very difficult for anybody, to be honest, to kind of give better service on this specific niche versus us. And we have the luxury of a bit of a time advantage. So we now have built our brand. A lot of people actually trust what we've done. And I think it's not going to be easy for new players to actually take away that trust.
Got it. So for someone starting kind of taking your rocket model of taking something that's worked in one market and going to another, for someone considering starting the StashAway of the Philippines, Indonesia, Vietnam, any of the other countries in Southeast Asia, how would you recommend they go about that?
I recommend they don't go about it. No, jokes aside. No, jokes aside. So I think you need to look at it country by country. I think the reason I'm not launching immediately right now in countries like Indonesia, Philippines, and Vietnam is twofold. On one side, I think the market is not ready. I think this is a product for white collars, and I don't think there is a lot of white collars with a lot of savings in any of these markets, maybe with the exception a little bit of Indonesia. But secondly, and I would say even most importantly, the regulators are not ready. And so in order to build a product that actually fulfills the regulatory requirement, you're gonna be forced to build a product that is not really good, which is the reason why we decided to, I just mentioned it earlier, we decided to launch in Thailand, or to go to Thailand first rather than one of these countries, because we thought the market is more developed and the regulation is also more open. So we are taking an approach. So to whoever wants to do that, I think they need to take a very close look at regulation, what they can do and cannot do, and whether they can build a world-class product with that. There are a couple of kind of players that go kind of provide somewhat similar services to what we do in Indonesia, but because of regulation, they are forced to actually build portfolios using local assets. So Indonesian assets, which honestly, I think defeats the purpose. I think, it doesn't solve the problem.
So yeah, one of the questions from Kevin from the audience was, would love to hear how you're thinking about any regulatory licensing challenges as you expand to countries beyond Singapore and Malaysia. I think you addressed that a bit. Are there any others?
Yeah, so every country is a different game, and that's, I guess, the beauty of Southeast Asia. You can see it both ways. One side is a gigantic pain in the neck. On the other side, once you solved it, it's a great barrier to entry for potential competitors. And because regulations are actually different across countries, you need to go into the details of each of the countries and understand what you can and cannot do, and how you need to change your model. For instance, your custody structure, or how you need to, or maybe there are some regulation about kind of capital, local currency protection. So how much can you move money in and out of the country? And there is a taxation differences, et cetera, et cetera. So it's actually very, very complex. I always tell my team that the willingness and ability to solve very complex problems is actually a competitive advantage. And in this country, in this region in particular, because there is so many complexities, that the willingness to just go into the details of trying to understand those problems and try to solve them, I think it does create value.
Yeah, thank you. This is actually a question from Todd, but I'm going to read it. What technologies do you use for your investing operations, and what would you like to have? Do you need to email any spreadsheets back and forth with your fund management partners or anything like that?
No. So we try to do everything through APIs wherever we can. So the investment technology, it's built in-house. So the whole kind of investment, the execution system, let's call it, is actually, we built it. And then it connects through APIs with the brokers. We work with Saxo as a broker, but we could work with another broker similarly. And that's done through APIs. So there's no manual process, no emails, no faxes, no nothing. The only processes that are actually still manual are the SRS processes. So SRS is a supplementary retirement scheme in Singapore. It's a scheme that gives some tax kind of tax savings to people that actually promise to keep the money invested for a long time. It's a Ministry of Finance project, and the three gatekeepers are DBS, OCBC, and UOB. And unfortunately, we need to communicate with them through fax. So so when we had to do it, there were a few people in my team that saw a fax machine for the first time in their lives. So that's one process. And then the other, yeah, that's amazing. As I say, coming from Todd saying that's amazing. Yes, there is 12 billion Singapore dollars in the SRS systems, and it's managed by fax. It's kind of scary, more than amazing. The second piece where we're still using some more manual operation is, again, connecting with the banks. So there are certain things that we actually we're not able yet to completely automate in terms of API connectivity with the banks, and that's partially because the banks are closed and partially because we deprioritize it.
Got it. Thank you, Michele. I have one last question for you, unless I see any more pop up. But I've seen that StashAway is actually doing quite a lot of hiring right now. I've seen your LinkedIn posts, and I don't think my boss is on this, but if someone wanted to get a job at StashAway, could you tell us a little bit about your hiring approach? Because as you mentioned before, it sounds like a kind of a tough screening process. So maybe we'd love to hear about that.
Yes, I mean, we put a lot of attention and invest a lot of time in hiring. I personally probably spend at least 2 hours a day interviewing people. And the process is, I mean, it's a simple process of a number of interviews with a bunch of different people. Depending on the role, the type of people will be different. What we look for is, most importantly, attitude and potential, more than experience. And this is in general. So we want somebody that has the right can-do attitude, that is transparent, that is kind of high energy, that wants to get stuff done, that is ambitious, that is willing to go the extra mile, that has a sense of ownership. So that's one part. And the second part is just kind of a pure brain power and willingness to learn and ability to learn faster. This is true for all roles. And then for certain roles, of course, we're looking for some specific experiences. For instance, you may have seen earlier today, I've shared that we are hiring a group chief compliance officer, which is kind of a very rare occasion to join a company like ours at the C-suite level. And then, of course, for that role, we're also looking for somebody that has at least 10 years of experience in managing regulatory compliance for financial institutions, either banks or an asset manager. I saw a question from Todd asking whether I do a McKinsey type of case studies during an interview, and yes, I do. I wouldn't call it McKinsey case. I think I simplified a little bit just to make it faster. But I've tried different. During the course of my career, I tried different approaches to interviewing, and I just realized that the only way for me to understand whether I would enjoy or not to work with another person is to pretend I'm actually already working with the other person. And the case study gives me the chance to just pretend we're having actually a problem-solving session. Let's see how it goes. And so I found it personally kind of the easiest way for me to kind of get a feeling of whether I would like or not to work with another person. Other people in the organization. So we don't have a structure that we don't force everyone to use the same structure. We think, because I've been forced before to use other people's recruitment logics, and I realized that for me it didn't work. So I don't want to force people to do that. And I think actually having different angles and different people that interview in different ways actually, at the end of the game, produce a better result.
And maybe this is a question for me, Michele, but how does this hiring approach fit into the broader StashAway culture that you're creating?
So I think, culture for me is a super important topic. And the reality is that 99.8% of companies' culture is driven by who you hire and who you fire. And so that's exactly the reason why I spend so much time interviewing people, and I put so much attention in hiring. So to your question, I think hiring is the one pillar of building culture, because deciding who you want on the bus and who you want off the bus, which is a quote from I think Good to Great, is the most important thing if you want to build the right culture. And then the hiring process, I think, is also a way to showcase the culture. As you speak to 3, 4, 5 people within the organization, you realize kind of how we've asked the question, what is the type of experience you have, and that's, I think, a representation of our culture. We also have a culture paper that we share before all the interviews to make sure that people actually know what they're kind of going into.
That's amazing. That's amazing. Sounds like a fun place to work.
It's fun. It's hard working, but I'm having fun. You should ask the other people.
Work should be fun. I agree. I can say the same for my team at Grab, but yeah, StashAway sounds like a great place to work. Probably because you're at the lead. I think that's about all we have time for today. So Michaela, thank you so much for joining us to speak about wealth management and savings in the time of COVID in Southeast Asia. Best of luck with all of the new initiatives, and thank you to the audience for joining us today for the second episode of the Green Room. Please write to us with your comments. We'd love to hear from you, and we hope to see you again soon. Thank you, everyone.
Thank you, Amrita, and thank you, Todd.